All right, welcome everyone. I'm Ted Erhart. Hey, I just want to draw your attention to a trend that I've been seeing throughout 2022, but that trend continues, and in fact, it looks even more extreme as I record this here on September 13th. So what I'm talking about is an opportunity for cash. Lots of my clients in recent years have had more cash than they know what to do with, and it's like, where do I park this to get a safe rate of return? Well, it's been a major issue, but this year we've seen this massive divergence between the interest rate being offered on bank products like savings accounts and CDs in comparison to the United States Treasury market. So bond yields, specifically in U.S. Treasuries, right now significantly exceed that being offered on comparable bank products. And you can see that in the chart that I put up here comparing the 12-month CD versus the 1-year U.S. Treasury. And in theory, these two should generally yield or offer a very comparable interest rate because they're the same credit risk. You know, a 12-month CD that you get at your local bank is ultimately going to be backed by FDIC, which of course is the federal government. Well, when you buy a 1-year United States Treasury, well, what is that ultimately backed by? It's also backed by the government. So again, these things should typically be close, but occasionally, as you can see in this chart, we'll see this big spread open up where Treasuries will be significantly higher than that on comparable CDs, and that's what we see today. Now, just to really emphasize this point, let me show you some real-time data. So again, today is September 13th. We've seen a pretty significant move in interest rates today because of some inflation data that came out. But take a look here at where the 1-year U.S. government bond is trading, or this is the 1-year Treasury note to be more technically accurate here. So the yield today is 3.72%, and that's popped up by about a quarter point. In fact, it was actually over 3.9% earlier this morning. So this kind of gives you some sense of how interest rates move in the secondary market. But what I want to do is show you this in comparison to CDs. And I know there's some local banks here, I'm in the Minneapolis area, that have been offering 12-month CDs in the mid to upper twos. And I also looked this morning, here's a bank that I'm just familiar with as a customer personally. This is ally.com, and they are offering a 12-month CD presently at 2.7%. So my point is, obviously, you know, when you go back to Treasuries, we're talking about 1% more, an entire percentage point spread over the highest yield CDs that exist right now. It's a major difference. And to me, this, again, looks like an opportunity for those seeking a safe return on cash. All right, so naturally, the last question to answer is, how do you purchase Treasuries if you're interested? We got to be a little bit financially savvy because Treasuries are purchased via the secondary market in the same way that stocks are. So you're not buying, you know, for example, when you buy common stock, you're not buying it directly from the company. You're going to the marketplace to buy the stock from somebody else. And Treasuries are the same way. So you can obviously purchase Treasuries through professionals, you know, like me, but there tends to be costs involved with that. If you're a little bit financially savvy and you have a direct retail account at, say, Fidelity or Schwab or TD Ameritrade, and if you can figure out how to navigate through their fixed income platform, which are, you know, they're very navigable, if you will. They have to be because they're made for retail investors. You can purchase these directly through those platforms, basically with no costs associated. So anyway, this is just an interesting trend that continues throughout 2022. And actually, since I started recording this, we can see the rate on the 1 years pop back up. Look at that. It's up over 0.4%, or what we would call, it's up over 40 basis points today alone. And this, of course, is a good example of why people like me are interested in the markets. You get these days like this where you have huge moves in prices, and it really makes the game interesting. But anyway, I hope this was helpful. If it was today, look, just smash the thumbs up button. It lets me know that you enjoyed the video. And thanks for watching. I hope we'll see you in the next one.